Hello, I'm Richard St. Paul, entrepreneur and founder of the St. Paul Law Firm, a law firm dedicated to families and small businesses. Over the next hour, we're going to talk about ways to build wealth in the Black community. Let's start with some facts and figures. A new report says the median wealth for Black Americans will fall to zero by 2053 if current trends continue. Also, household wealth for both Blacks and Hispanics are set to fall by double digits respectively. But it's expected to rise for whites. With the U.S. on track to become a majority-minority country within the next 25 years, the numbers I read to you are troublesome for everyone. However, there is time to turn these statistics around. Today, I'm joined by several experts in building wealth in 4 crucial areas: life insurance, investments, entrepreneurship, and real estate. My first guest is Eugene Mitchell. Eugene is president and CEO of Mitchell Enterprises, LLC, a financial literacy and financial services focused company. He is also the author of the book, The 7 Untold Rules for Creating Black Wealth. Let's come together and close the wealth gap. He has served as the corporate vice president and manager of the African American market unit within the agency division of New York Life Insurance Company. Welcome, Eugene.
Thank you, Rich. It's great to be here with you.
Good to have you. So let's talk about building wealth from life insurance. Now, they call it life insurance, but it's true you don't get the life insurance benefit till somebody dies, right?
Correct. You know what? There's benefits that you can take. They call them living benefits. So we can talk about those as well.
Good.
So it's not only when you die.
I want to jump into that later.
Okay.
So tell me, how do we build wealth through life insurance?
It's a great question. I'm glad you asked. It's something I'm extremely passionate about.
You seem like the right person to ask about it.
Thank you. Something I'm extremely passionate about, because you can not only build wealth with life insurance, I believe it can be a path to closing the wealth gap for families in the Black community. What I mean by this is, and for the most part, we have to rethink what most of us understand life insurance to be. For many in the Black community, I realized over the years, 17 years at New York Life Insurance Company, I realized that most of us, we've only been taught or misguided to believe that life insurance is about covering the cost of the funeral. It's about final expenses.
Right.
And I realized that that's not what other races, religions, and ethnic groups around us are doing with life insurance. They're using it to create an inheritance. The idea being that each generation doesn't have to start from scratch. So a father in say the white community may take out a $250,000, a $500,000, maybe $1 million life insurance policy. It may cost him a few $100s a month, but he knows that when he passes, that there will be a down payment, the money that will be received, that mom can live off the interests of that money in the bank. The kids can have a down payment for their homes. When you think about some of these gentrifying neighborhoods, how do you get 20% down as a lump sum? Most of us can't save to get that 20% down.
Right.
They can use tools like that proceeds from the life insurance.
So wait,
Yes,
somebody can get $250,000 or $500,000 or $1 million policy, but at what cost? How much does it cost for these life insurance policies?
So it varies, especially when you start. Life insurance is priced by your age, by your health, and your ability to pay. So the younger that you start, is the more affordable it can be. And so the father might have paid a few $100s a month, starting when he was 20, and then his family grew, and he continued to pay over time.
So the younger you are and the better health, the lower your payment would be.
That's correct.
So if I wanted to take out, for example, well, first of all, let's start with what kind of policy are there? Life insurance policies are there? I've heard of variable, I've heard of insurance with investment components. I've heard of term. Right. Am I right about are these different policies?
No, absolutely.
So what are the difference between these different policies?
Sure. So the idea is the investment that suits your need for where you are in your life. There are some that are called term policies. There's 2 basic types of policies. You've got the term and you've got a permanent.
Okay, tell me about term first.
Term. Yeah. Term is like it says, is for some short span of time. Say a 5-year, 10-year, 15, 20-year term. Typically, you have a bill or a family that you want to make sure that it is taken care of if anything happens to you, that would be paid off.
Right.
Because it's a shorter amount of time, the company doesn't have itself exposed to a risk of you passing away for a long time, so they can afford to price it less expensive.
So term life would be the least expensive type of insurance.
That's correct.
And it could go from 5 to 20 years.
20, 30 sometimes.
Sometimes
depending
30
on the company.
And it's best that you get it when you're younger and healthy.
Correct.
Now, can you get health insurance if you're older and have some health issues? I mean, can you get life insurance if you're older and
It
have?
becomes more expensive.
It becomes more expensive.
Because you think about the position of the company, if you're closer to passing or having some kind of illness, then they would say that they're putting themselves on risk, that you won't make the payments over a longer period of time so that they make money. It's
So-
sort of a risk return that they're factoring in for themselves through the actuaries.
And it makes sense from a company side, right? They're not going to want to secure people for a lower cost if they know that they have health issues,
That's correct.
which could potentially lead to them passing in a certain amount of time.
That's right.
But nevertheless, it's a good idea to have life insurance for term life insurance if that's what you can afford. So you're saying that the ability to purchase insurance is really determined by your ability to afford the insurance.
Age and health as well.
And
That's
age
correct.
and health.
That's correct.
Okay. So if you're purchasing, who typically have you seen purchase term life insurance? What in terms of what categories of people have you?
So when you talk about creating wealth and sort of building wealth in our community, I think a big part of what we need to understand, and why I wrote the book about the 7 untold rules, the first is know yourself, know your worth.
Mm-hmm.
So if you have a car, you know that you have to have a car insurance. If you have a house, you have to have home insurance for the mortgage. We don't typically understand our value and our worth. A simple way that we can calculate this is to do a current value of your future earnings. So if you're making $50,000 a year for the next 20 years, that would be $1 million that you would potentially bring in to your family. So you're $1 million asset for your family, your children, your children's children, for what you can invest that money when you have it coming as your income.
I like that.
If you don't make it home tomorrow, that would be $1 million that your family won't receive over the next 20 years.
I like that. So basically somebody can say, I'm making 10,000, 20, 50,000, 100,000. Let me look at what I would make over 10 years,
Yes.
and that, which would be, if you're making 100,000,
Yes.
it'll be $1 million. If you're making 10,000, it'll be 100,000.
Correct.
And then then that is what I would then go and say, I'm looking for life insurance for this particular amount.
Correct.
And you base it on what your salary is at the time over 10 or 20 years.
So that covers your income needs.
Right.
For yourself and your family.
Right.
So the idea, so I'd say 4 uses for life insurance. The first is sort of a safety net. So immediate expenses if something were to happen to me. Right, we talk about paying for the cost of the funeral. So any immediate bills that may come in that the company my family doesn't have to put up a GoFundMe page to get those
Right.
assets.
Right.
So that would be the basic level. The second level will be the income protection. So if I don't make it home tomorrow, we just said there's going to be immediate expenses, but I don't want my family to be put out of the house because they can't make the payments over the next 20 years or so.
Right.
That I want to make sure that my children's education is paid for. That all the things that I've hoped for and dreamed for will come to fruition even if I'm not here. So that's that income protection part. The next part, on some of these permanent policies that we talked about, the term and then the permanent, that there are investment guarantees that the company will give you for the payment or the premium that you pay each month. And so there's tax advantages and guarantees that you can receive as an investment tool. And then lastly, the other use for life insurance will be to create a legacy. These are things that I was saying that I think are missing in part in our community when we're only thinking about burial policies. So if there's the tithing back to the church that I want to continue after I'm gone, if there's an organization or institution or the HBCU or someone that I love, my fraternity, sorority, someone that I want to give back to, I can use a thing like life insurance to make sure that is left and maybe put into my name as a contribution.
Now, the life insurance, when somebody passes, somebody receives a life insurance benefit, is that taxable?
So for most proceeds of life insurance, it's not taxable.
Well,
Tax
that's one of the few things that aren't
Few
taxable.
things that aren't taxed. How about
So
that?
look, you wrote a book.
Yes, sir.
Right? We talked about it earlier. Why'd you write the book?
Sure. So leveraging these ideas, like I said, for watching other races, religions, and ethnic groups that I worked with, use tools like life insurance to create wealth. I rallied the 1,500 African American financial advisors that I led onto a campaign.
This is across the country?
Across the country.
Wow.
So it took us 7 years to complete a campaign where we touched 200,000 African Americans and got them to see the value of owning at least $250,000 of life insurance. You multiply that out, 200,000 people with $250,000 of life insurance will create $50 billion of protection and tax-free future income as long as they keep those policies on the books.
Wow, can you imagine what you could do with $50 billion?
The next 10, 20, 30, 40 years, it's a fact of life. We don't get out of life alive.
That's it.
So we're going to pass. But this now thinking of an investment tool for our children and our children's children, we can create $50 billion from this collective input.
And that's exactly what we're talking about, building wealth through life insurance.
Yes.
That $50 billion, see that pen, 50,
yes,
is that for 50 billion?
Yes.
So you can actually build wealth through life insurance, but people have to figure out how much they need, do it when they're young and healthy so they can get the best premiums available.
Correct. And if we do that individually for our families, we can create empowerment. If we do it collectively across our community, think about what that could do. So from that $50 billion, think about the deposits we can put into black banks, right? The tithing to our churches, the endowments to our charitable organizations and institutions. This is the potential, the power of this tool. And so that's what I wanted to write and convey in a book. And as well as other strategies, tools, and tips to create wealth that I've realized as I went along in those 17 years.
Remind us one more time the name of the book?
Sure. The 7 Untold Rules for Creating Black Wealth. Let's come together and close the wealth gap.
And how do people get in touch with you? Do you have a website?
I do. The7UntouledRules.com.
Fantastic.
And EugeneMitchell.com as well.
EugeneMitchell.com. Thank you so much, Eugene.
Awesome.
Really appreciate your time.
Thank you, Rich.
Up next, being in it to win it, investments to build wealth. A financial advisor will be here to walk us through it. Welcome back. Now we'll look at how you can make investments to build wealth. For that, I'm joined by Mark Smith. Mark is a financial advisor with UBS Financial Services. Mark advises private clients, companies, and large institutions on a plethora of financial matters. He has also served on the National Finance Committee for President Barack Obama. Welcome back, Mark, and let's talk about investments. First of all, there are a lot of type of investments out there, right? Stocks, bonds, mutual funds. There's so much stuff out there and so many opportunities to make money. But let's talk about some of the most basic, easier to understand investments that people can make. What's your thoughts on that?
Listen, I'm here to say that investing is for everyone. In the last 20 years, the democratization of Wall Street has allowed the average person in America to become a millionaire through investing in stocks for the long term. No other industry can say that. If you're in real estate, you need serious money and great credit in order for a bank to lend you money, get a mortgage, and for you to go ahead and buy a piece of property, whether it's commercial or residential. The stock market, you could be at a $15 an hour job, save up money, and buy stock with that $15 the same day you make it. And that money, that kind of stock will grow over time and allow for you to have wealth one day. So the first thing you have to do is know how do you buy these stocks. And it's very easy nowadays. There's a plethora of different websites that you can go to, E-Trade, Schwab, Robinhood also has a trading platform, which is free trading. So you go on there, you open an account, first step. Second step, you start reading the Wall Street Journal, Barron's Magazine, which is a weekly periodical, and then that's it. Maybe watch some Bloomberg if you're real bored at night one night, and you want something to go to sleep to. But once you get onto that, once you start paying attention and finding out what's going on in the world, you're going to start to realize, wait a minute, stuff's starting to make sense. Apple looks like they're coming out with a new product. Maybe I need to get on board and buy some Apple. Or do I not want to pay attention at all, and do I want to just buy an index fund? So index funds are great because you own all the stocks of the country that you're in. So like if you want to buy the U.S. and you want to bet on the U.S., okay, you're real on board what's going on, then you want to buy the S&P 500.
Well, let me stop you there, right, before we get too far ahead of ourselves. You've been doing this for almost 20 years.
Yeah.
So you can wake up in the morning and buy stock, very easy for you. But for the average person, you're suggesting they go online, open up an account. There's first of all, you should
a brokerage account.
Brokerage account.
Correct.
There's different. You said Robinhood. I've heard of Stash, Schwab, Charles Schwab, TD Trade America.
Whatever you feel comfortable with. Just
so
get in the game.
If they just get in the game.
Get in the game.
Now you said if somebody's at a $15 an hour job,
Correct.
they can make a stock investment too.
Absolutely.
Which makes sense, right? There's even penny stocks out there.
Absolutely.
Now the question I have is, how do I know which stock I should buy?
So listen, if you don't know and you don't want to research it, there are index funds. Picking stocks for people who want to research the stock and do the homework that I just mentioned before. Wall Street Journal, Barron's, Bloomberg, et cetera. If you want to be that person that just puts in $50 a week into the stock market, buy an index. S&P 500 is an index. Everyone knows what that is. It's the top 500 companies in America.
Isn't that the same S&P index that Warren Buffett said that will outperform any other index? And he was right. I think he made $1 million bet on that.
He's right. There's been a lot of other folks. Vanguard's founder also felt the same way, that indexing was the common man's way to get wealthy in America.
Let me just stop you right there. How do I find out where do I buy index funds?
Index funds are just Google. How do you buy index funds, and give you the list of index funds, and they'll tell you what they do. So an index fund, if you want to buy the top 500 companies in America, buy the S&P 500 index fund. There's a plethora of them. If you want to buy Europe, if you want to buy emerging markets, China, Russia, India, Brazil, then you can buy an emerging market index fund. Great thing about these index funds, they're super cheap to own. Someone else is picking the stocks for you. You don't need to know anything. You just keep buying them. And over time, 10, 15 years, you'll start to see your money compound and grow like you've never thought before. Because one thing, and one of the greatest things that's ever been invented, is compounding. You start off with $100, you make 10%, you have $110. But now the next year, if you make 10%, you don't make $10 on $100, you make 10% on $110. That's compounding. So as money starts to grow, you get to get compounding involved. That's when the wealth starts kicking in.
So you have to play the long game in the stock market.
Absolutely.
So
Absolutely.
It's not a short. It's not quick wealth.
We're not day trading over here. We're telling you how to make money guaranteed over for long-term goals like retirement planning, funding a kid's college education, buying your dream home. All the stuff is long-term planning.
Okay, so you suggest that even $50 a week, investing $50 a week into the stock market over 10, 20 years, you'll see a potential return on your investment, right? Nothing's guaranteed, there's always risk, but it's likely over time that you will see that return. But just $50 a week investment.
If you invested, yeah, absolutely. And there's a mountain chart online you can look at. Do the S&P 500 mountain chart. If you put $10,000 in 1960, in the year 2006, that $10,000 would be worth $3.8 million if you have never put another dime in the stock market.
So this works. This is not trickery.
This is not trickery.
Stuff works.
The S&P 500's average return is 7 to 8% annually.
And how much do you get at a savings account at your bank?
Less than 1%.
Less than 1%.
So if you're keeping money in cash, you're boo-boo the fool.
Well, nobody wants to be boo-boo the fool. So first thing you say, open up an account, find the index funds, invest in the index funds.
If you don't know anything about stocks and bonds, that's what you do.
But if you want to learn,
then go to Barron's, Wall Street Journal. You'll start to hear things. Guess what? I've got an iPhone in my pocket, an iWatch on my hand. Might make sense to buy some Apple stock because I'm never going to go into another company again.
But you invest people's money. You invest people who have been very successful in life, in entrepreneurship,
right. Yes.
Have hundreds of thousands, millions of dollars. You invest their money for them.
Correct.
Why is that?
Well, listen, the wealthier you get, like Biggie said, the more money, more problems. And so you need people like me to make those problems go away. And so what I do is I try to help you avoid serious issues like taxes. I have a lottery winner who won over $20 million in lottery. Guess what? Half of it was gone day one. And so some people that have big paydays, they don't realize that tax is such a big part of the equation. So I try to help mitigate those problems and issues. And so wealthier people need people like me around. Wealthy people want to invest their money, but do it in a safe way. What are the options to do that? You don't have to take a risk with your money to make money. That's one of the misconceptions. You don't have to be all in 100% stocks. You can have bonds, which are very safe. You know, the wealthier you are, the more you're worried about taxes, municipal bonds, tax-free interest. Hello, you're paying taxes on that money you have in your savings account.
And this is why people go to you, because you have the information. You've been doing this for almost 20 years.
Correct.
People come to you because you are a financial expert
and they are doing
licensed to do this.
Right,
also.
and they are doing whatever they do to be successful. So they don't have the time to do what I do. That's why they hire me. It's not to say that they won't have the brain power to do what I do and do it by themselves. It's because you just don't have the bandwidth. And those people come to me.
Now, the last question I have. We've heard of many people who have been scammed by investors. What would you say? What advice would you give to people out there to help them avoid that happening to them?
There is one easy way to avoid scamming. It's if you woke up in the morning and you found out all your money was gone, who are you going to sue? And if that person has no money, you went to the wrong person to invest with. You need to go with the big boys. If you go and call Schwab and say, my money's gone, Chuck Schwab is going to be like, whoa, something happened? Let's look into this. And then here's your money back, sir. Please don't complain, anybody. Like the Wall Street Journal, the New York Times, because they have a vested interest to keep their names spotless. Right. When you have someone who's has a little corner store on the side called blank associations or incorporation, you're suing that person and you're suing that little corner store. So that is how you prevent yourself from getting into scams and stuff like that, is really know the company or the person you're investing with and know that they have the kind of money to back your investment.
So part of the investigation process will be whoever you go to invest your money with, understand what that particular business and individual, what their assets are.
Absolutely. It takes homework to make money, people.
Absolutely.
Nothing's free in life.
Everybody should do their homework. Mark, you've been fantastic. How do people get in touch with you?
You can look me up, Mark C. Smith, UBS Financial Services.
Awesome. Thank you so much, Mark. Appreciate your time.
Thanks so much.
Up next, how to build a business that will build wealth. In this segment, we will talk about entrepreneurship and how to build a business that will build up your bank account. For that, I'm joined by Sabrina Lamb. She's an entrepreneur and founder and CEO of theworldofmoney.org. The World of Money is dedicated to the financial education of youth in the tri-state area, New York, New Jersey, and Connecticut. She is also the founder and CEO of Wakiza. Sabrina has presided over the NASDAQ opening and closing ceremonies, testified on Capitol Hill before the House Subcommittee of Financial Services. Wow, that's pretty impressive.
Thank you.
Before I welcome you, Sabrina, there is something I want to read that I thought was very interesting. I wanted to mention some facts about entrepreneurship. During the past 2 years, more than 25 million Americans were either starting or running a new business in the United States. 6% of Americans own a business as their main job. Also, out of 585 U.S. billionaires, 62% are self-made. So it seems like entrepreneurship has a track record of building wealth. So Sabrina, welcome.
Thank you so much for having me, Richard.
I'm happy to have you. So tell me, what does it take to be an entrepreneur?
It takes guts. It takes self-awareness. It takes not thinking that this is going to be an overnight success. So first, one must do a self-inventory and move from owning your own business mindset to being an employee. And that's the first start. For everyone, that's not an easy transition because with being an entrepreneur, an early stage entrepreneur, you may not have those revenues coming in right away. But being a patient entrepreneur, providing a product or service that the world needs, and I said the world because we must think globally, and there are many platforms where you can sell your product or service, something that's naturally aligned to them, but it takes guts and as well as self-inventory.
So if you want to start a business, you got to first think about having something of value that people are going to purchase, right? It could be anything. I'm in the legal services, you're in the world of money, you've had your own businesses before, so you have to come up with something of value.
Yes, yes.
Understood.
Yes.
I'm thinking, I'm an entrepreneur, right? Someone wants to be an entrepreneur, right? They believe they have something of value, right? But they need to raise money in order to market their idea, in order to buy some more products. Suggestions on raising money?
Well, I think that a lot of entrepreneurs or people who dream or who are determined to become entrepreneurs focus too much on the fundraising. Where am I going to raise the money? First, I think that an entrepreneur should have his or her own skin in the game. So I believe that you should bootstrap it as long as possible, and to show that there is some sort of a market for, a demand for what you have, and then those investors will come. You'll often hear, you should raise money through family and friends.
Yeah.
Well, it depends on your family and friends,
right?
Because some family and friends are not going to give you a nickel.
Right.
So then what? So choose a business that has a minimum need for capital, and bootstrap it for as long as you can, and then seek investors.
Right. So the advice would be, if you're an entrepreneur and you have something, you have to be the first investor.
You have to have your own skin in the game.
Right.
Why should I invest in your business and you haven't invested?
That's right. So if you have to cut costs, if you have to sell a 1963 Chevy
Yes.
to get the money,
Yes.
then that's what you have to do, because you're the investor, you're the first investor, and so you have to make that sacrifice.
If you have to live in your garage, no cable.
Hey, you know who started the garage, right? Bill Gates.
Everyone. Silicon Valley started
Right.
in the garage.
Right.
So you're going to have to sacrifice a lot. And that's when I go back to self-inventory. Are you willing to sacrifice all of that in order to build your business?
So the first step in entrepreneurship is
Bootstrap your own
be
your own
ready
business.
to sacrifice.
Right.
So now,
Yeah.
there are a lot of people who start a business and they ask, well, should I just start my business, or should I start like a company or LLC or a partnership?
Mm-hmm.
What's your thoughts, having set up businesses before? Do you think people should have separate entities, or should they just, start up a business as what we would say is, in a legal term, sole proprietor?
I think that you should create a legal structure that protects lawsuits from seizing all of your assets. And for that, you're going to need legal advice. Now, LLCs depends on the type of business that you have. There's different choices, but I think that an attorney can advise you appropriately. All of my businesses have been incorporated, and depending on my fintech company, for example, is registered in Delaware because my lawyer said that's where it should be. They have a long legacy of precedence as it relates rather to fintech,
That's
the
right.
fintech industry. Other states do not, but you need legal advice to determine which one suits your business. But the primary reason why you need a legal structure is to separate your assets, separate yourself from your business, so that I can't sue John Jones. I have to sue John Jones Company instead.
That's right, because for an attorney who practices in this area, you want to absolutely have a separate legal entity that was going to protect your personal investment. And the cost to set up a company is very minimum. It's a couple $100
Yes.
typically in each state. And a lot of people do go to Delaware, although it's not necessary, because Delaware has specialized courts called the Chancery Court that understand business a lot. So the courts are very friendly towards businesses. But again, it's not necessary to go to Delaware. Nobody has to rush in Delaware. Every state has,
Right.
you can incorporate in whatever state you're in.
Sure.
But it's best to keep that separate. And that also means keeping a separate bank account. You can't tie the two.
You can't
everything.
commingle.
The business is separate.
That's correct.
From the individual. That's actually excellent advice.
And you were talking about the investors, or who's going to invest. An investor is going to look at your financial statements. If you're using your own bank account, they're not going to invest in such a business. So you have to show that there's separate structures. You have to set up your business accordingly.
Now, you said you have an attorney. Do you have an accountant?
I have an accountant as well, absolutely.
And who else would you say is a vital part of your business team?
So the lawyer, the accountant, the payroll. I have a payroll company as well. So I have all of those who very, very keenly focused on every aspect of the monies coming in of my business. Making sure that the filings are done on time, because if you don't have those professionals representing your interests, there's a term, and I know you know this, a term in the law called ignorantius juris non excusas.
That's right.
So ignorance, you can't say, well, I didn't know that.
That doesn't
you
matter.
still are subject to fines as well as jail time.
Absolutely.
Even if you don't file on time, they can take your business away.
That's right.
Yeah.
If you don't file your taxes, you got to file your taxes,
That's correct.
whether as an individual or a business. You have to follow the law. Now,
Don't listen to Wesley Snipes. All right, file your taxes.
That's a guy that, unfortunately, I like his movies, but he unfortunately, was in federal,
exactly.
federal time for not paying taxes. But so, do you find that the professionals in your business are a very important part of your business in terms of the accountant and the lawyer, and they're worth paying for?
Oh my gosh.
Yeah.
Yes, you need to pay for professional representation to make sure that the thing that you have built so tirelessly, is operating as it should. Because if all of those dots are not filed, we just filed an annual report in Delaware and so forth, you're going to be fined, or your business can be dismantled. So you must have that foundation, that structure. And again, if you're ever looking for financing or investment, those investors are going to say, I need to see your annual report, your financial statements. Did you file a 990? If you didn't, why not? Is it audited or not audited? Was it audited, reviewed? You have to have that done.
And and of course, it all depends on the type of business you have. If you have a corporation, you're going to do 990. If you do an LLC,
Yes.
you'll do 1040 schedule on your tax return.
Yes.
But again, the goal is for entrepreneurship, you have to sacrifice, talk to professionals. Where could I go to get more information about my business?
Well,
Oh, I'm sorry. Where could I go to get more information about entrepreneurship? Are there organizations that you know of that provide free advice?
sure. And everything, there's a lot of free, I'm going to give some free advice, but sometimes it's worth
People
nothing.
appreciate that.
Yeah, but there's some things that you need to pay for, and that's good, right? So, for example, edx.com, where you can take online entrepreneur courses and receive a certificate for it, and it's taught by well-known universities here in America. There's Udemy, that's udemy.com, where you can take entrepreneurial courses. You can go to YouTube and plug in entrepreneurship courses, and those will pop up. You can go to the Small Business Administration, and they have courses. They will assign mentors. There's no separation. There's no gatekeeper separating anyone from the basics and whatever level of entrepreneurship that one person is in.
Marketing, very important for a business.
Yes.
A lot of people say, how do I get customers? What's your thoughts about getting the word out about your business?
So don't sell,
Don't sell.
share a message. For
Nice,
example,
nice.
right? So, most companies you see in advertising, some of them may say, well, it's $9.99 and whatever, but they give a message of inspiration. Many, the lifestyle companies will do that. What is the message, the value creation that you want your customers to walk away? How do you want them to feel? And so through your social media, which is free, you can have social media campaigns, which is inexpensive, on all the well-known social media platforms. Every company is there. Your company should be there as well. And what is your message? What is the feeling that you want to, what your customers to identify with? And also, so when you're reaching out to them, it's not just putting an ad on Facebook or Instagram. You need to target who are your customers. What age group are you serving? Where do they live? Are they here in America or are they in Norway?
That's a good point. Know your customer. Who is your customer?
Who are you selling to? Yes.
Before we close, I see something in your in front of you here. It looks like a
What
book.
is it?
Yeah, it looks. I haven't seen that before, but tell me about what's in your hand and what's in front of you there.
What's in my hand? Adam Clayton Bell. So anyway, so this book is called "Do I Look Like an ATM?" A Parent's Guide to Raising Financially Responsible African American Children. And I know you are really passionate about this issue, and so I brought a copy for you.
Oh, thank you so much. Look, I want to thank you for coming on. How do people get in touch with you? How do they learn about the worldofmoney.org? How do they learn more about you? Where should they go?
Well, they should go to worldofmoney.org. That's the website. And also you can follow us on all the social media. Also go to Wakeza, WEKEZA.com for more information as well.
Thank you so much, Sabrina. Really appreciate it. Love the book. Can't wait to read it. And I'll talk to you soon.
Yes.
Up next, how to turn real estate into real wealth, building opportunities. In this segment, we'll talk about ways to use real estate to build wealth. For this, I'm joined by two seasoned pros. Victor Baker is managing partner of Mid-Atlantic Investments Alliance, LLC, and Michael Bunton is a general partner at Mid-Atlantic. Mr. Baker is an experienced real estate developer. His experience includes public-private redevelopment, financing, and urban redevelopment. Mr. Bunton has established a successful track record for securing financing and implementing infrastructure for real estate development projects for more than a decade. Their company has secured millions of dollars in financing for acquiring, constructing, and rehabbing properties. Welcome, Victor and Michael. So you both have built wealth through real estate. So let's go to the beginning. How did you first start?
I was actually, it was early 2000s for myself. I was actually living in New York, working in finance, and I had two college friends, Michael being one of them, just getting started in multifamily investing, rehabbing, flipping properties. And it just looked like a good opportunity to diversify and capture a different income stream I wasn't involved with at the time. Kind of just grew from there.
So Michael, since you've been involved in it so long, how do you locate a property to buy?
Well, really, it's about being on the grind every single day, staying in your community, knowing what's going on, keeping in contact with brokers. For me, real estate is local, so I tend to always have some contacts in the community. I stay on real estate aggregators such as Street Easy, LoopNet, to try to find what's going on. Always scouring listings from the big Massey Knuckles and Cushman Wakefield that are out there, and just working every day. Grinding every day.
So in terms of locating properties to buy, you should start online. Is a good way to start online within the area that you live on?
Yeah, I would say that,
Living,
the best thing for me is to know your market, know where you're at, know the houses in your community, or whatever community that you're trying to invest in. Be aware of the local pricing, closings, have almost a weekly conversations with local brokers to be aware of where the market's going, what deals they see. You have to be on the ground.
So you have to use your resources. And so would it be okay if somebody's looking to buy a property and they say, hey, I have a couple of dollars, I want to buy a property, I want to invest in the property. Can you just contact the broker and say, hey, I'm looking for properties, this is what I'm looking to spend?
You can, but the internet has kind of democratized the whole process. So you can utilize brokers as one option. Another way is to stay in with Street Easy for New York City is a fantastic resource because, and I'm not getting paid by Street Easy, but they aggregate.
We'll send it to them.
They aggregate everything. So if you want to know, if you live in Rye, New York, say, and you want to know what's on the market in your area, there's no better way to find out what pricing is than to get the 20 listings in the price range that you're trying to look into and stay on it every day. See what's closing, see what price they're closing, see how long it's taking for stuff to close. Yeah.
So you just can't wake up in the morning and decide you're going to be a real estate investor. You actually have to do, there's a lot of research that goes into this.
Definitely a lot of research.
Yeah. Victor, let me ask you a question. Yes. Should you have a team put together if you're looking to invest in real estate? And if you have a team, what does that look like? Who do you consult in order to purchase real estate?
Right. So from the onset, looking at the most basic of investments, obviously you want to have a banking partner initially. You want to know what you're qualified for, what your buying power looks like. I think secondly, if you're looking at distressed properties, you want to have a home inspector on your team or a very solid qualified contractor to assess what kind of improvements you're taking on. And then thirdly, just to kind of piggyback what Michael was saying, you want to have a market consultant or a very good broker who's versed in that area that you're interested in investing. So you're firmly aware of prices per square foot, whether you're going to be selling the properties or you're going to be looking for strong cash flowing rental assets. But your team should start out with a framework.
Now you said distressed properties. What is that?
Meaning something you may be picking up that isn't at its full functional use or maybe at no use at all currently, and you would be coming in doing value add investing.
So those are like the broken down homes that you see, and like they if they're fixed up, they're actually worth more than what they are now.
Commercial structures as well.
Right.
Absolutely.
So part of the team should be a banking partner or an investor, a broker, a real estate broker, an inspector who can inspect the house,
right,
and a
or
contractor.
a good contractor, yes, either or.
And is there a way to find like a good inspector or contractor? Or you kind of just have to do your research or ask around?
I mean, we've been doing this a little while, so I kind of am able to refer to just the network of resources and partners we've utilized over the years. But I think starting out with a good broker, there's always recommendations that will come from the broker as well as even the bank. They may have references for resources you can use for assessment of the property. There should be referrals for contractors within those networks. Obviously, you can go online and there's different resources you can utilize.
It's like Angie's List, huh?
Absolutely. No, it all is a viable reference. But again, like Mike says, it's just like pounding, being on the ground every day, utilizing various sources to compare information, word of mouth. Right. Contractors that have performed well for other people, banks that have performed well for other people. You
know what it sounds like? That if you're getting into real estate investment, it almost sounds like you have to make it like a full-time job. It sounds like it's very hard to do part-time. Is that your thought?
I agree. It's not a fly-by-night, get-rich-quick scheme, so to speak. We're not house flippers. We're definitely everyday real estate practitioners, very data-driven. The real estate processes are long processes. You know, if it's a new construction, there's a pre-development phase, there's an entitlement phase. So I'm not saying that you cannot do this part-time. Obviously, you would need income to transition into the business before you just, you know, went full-time. But it is a, you know.
For full-time seems to be pretty profitable. We'll talk about one of your projects coming up soon. But in the meantime, you had mentioned flipping, Victor. Michael, is there a difference between being a real estate investor and flipping houses?
Well, you know, just my background is in finance and stuff, and so what I found in real estate is kind of similar to something that we see in investing in the stock market. People tend to want to time the stock market. They think that you can get in, get out, take advantage of a short-term period, take your money off the table, take your risk off the table. But really, the way that you capture the move of an asset, if it's really going to go up, is to stay invested over. Let it work for itself.
So hold on to it.
So yeah. So
like stock.
Exactly. So people who tend to be short-term stock flippers tend to underperform the S&P.
Yeah.
I mean, grossly underperform, and all studies have borne this out. Same thing with a real estate flipper. If you're going to buy a house, and your time frame is in a year, and you think you're going to get 20 or 30%, why not hold on to it for 10 years? Maybe you might get 100%. You know. Likewise, if you are going to buy a house for a short-term flip, and you think you're going to make 30%, and you're wrong, how much do you lose? Holding on to real estate long-term, you get tax advantages, you might have cash flow. All those little things can help to cushion bad decisions. Whereas in the same token as a stock, you know, short-term, a stock might fluctuate up and down. And over time, if it's a solid company and you've done your research properly, you have solid growth prospects behind it, you're going to get an upward trajectory. And that's what you want to capture, whether it's real estate or whether it's a stock. You want to stay in it.
So would it be safe to say that flipping is like being a day trader and real estate investing is like being an investor where you're looking at the long term?
I would say that. I think that you have some of the same pitfalls from looking at something for such a short time frame. I think that you, yeah, exactly.
Yeah, because we see so many shows about people flipping houses, but the real wealth is in holding the asset, building upon that, and there's also tax advantages. Is that about right?
Another analogy. So you flip 10 houses, you make 10% on each one. The house that you're wrong on, what's your drawdown? Are you losing 70% of your capital on that? 50% of your capital on that? How many times do you have to be right? I'm sorry, how many times do you have to be wrong that won't take away from all your previous wins? And so just a long-term, our basic holding period is about 10 years, just to give you an example of how we approach it. It's not to say that something that we've done hasn't been immediately profitable, but just because it's immediately profitable doesn't mean you should get out of it. Right. You know.
So two important questions, and I want to talk about some of the property that you guys built. One, can you, Victor, can you really buy property with no money down?
It is not something that I can speak to confidently that I've done numerous times. I've actually never done it. I think there may be a specific type of transaction where a seller holds paper, so to speak.
Like holds a mortgage or holds a note.
And perhaps in that scenario, there's no money down, but there still would be some payment arrangement for you to.
So this is an instance where you say to a seller wants to sell their house, and they'll say, okay, I'm going to hold the mortgage. You pay me these payments directly.
Correct.
But there's still money changing hands.
There's still money changing hands. There's still money changing hands. So as far as the purchasing property with no money down, and I'm not familiar with.
Yeah, it doesn't sound like that actually exists. I just want to put that to bed. Right. So speaking of money, how do I get money to invest in property? If I have, how much money? First of all, Michael, what are your thoughts in terms of the amount of money I might need to purchase property? Is it 10, 20, 30? Does it depend? And then Victor, if you could follow up with that in terms of, if I'm short, where can I go to get money?
So how much money do you need to invest? Well, what has changed in the last, I'd say, 15 years is that there are a lot of smaller financial groups that are popping up that are allowing people to pool their resources to go out and actively purchase property. So now there are more opportunities for smaller investors.
How do you find out about these pooling groups?
You're hearing about them all the time. You're hearing about online or what have you, where people, even within communities, they don't have to necessarily be real estate investment trust. They can just be a group of friends, families that get together and want to purchase the property next door to them.
Okay.
Right, and so that will kind of even out some of the extensive capital costs that come in with real estate. If you live in an area, an urban area on the East Coast, especially in the Northeast, it is expensive to buy any real estate. If you live in Harlem and you want to buy your next door neighbor's brownstone, could be cost prohibitive. $1.5 million is not what everybody has. So it's all relative.
The first resource could be going to family and friends, pooling money together, or looking at other people who want to invest in real estate. Online, there are many resources in terms of finding people who have a real estate pool, and so you can get involved that way. So, besides that, are there other ways to get real estate money? Banks, hard money lenders?
There are absolutely all those options. I would encourage new players who may not be equity rich to try to find sound pro formas or sound investments, because those investments are going to speak to the potential investors that you're trying to go and raise capital from. So I do think that they kind of go hand in hand.
So break that down. What does that mean to the basic person?
Meaning there's a 3-family house in your neighborhood and it's for a very cheap entry, and the cash flow opportunity or the cap rate or the return on investment is very attractive. You're short, or you have a gap in the financing needed to make the investment happen, but I think that that particular investment will speak to the crowd that you're going to go out, whether it's friends and family, whatever pool you may want to shop.
So you have to know the numbers.
You have to know the numbers. The numbers need to also be talking almost by themselves.
Right. So you have to know what the house is. You have to do like comps. You have to know what the house would sell for in the areas. What the house, to get a distressed property, you have to know if I fix it up, what it would be worth. That's good for a real estate broker. And then, you have to do the numbers first. You just can't say that property looks nice, I'm going to buy it and think I'm going to make money.
How does the investment?
You have to do the research.
How does the investment communicate on paper when you're not talking?
Absolutely. Look, I want to go and talk a little bit about a project you did and you all did in Newark. If we could put the photo up there, it's a before and after. So you acquired this land.
Yes.
You built the building.
Yes.
Wow. And tell me a little bit about this project really quickly.
So this was 90 Clinton Avenue in Newark, New Jersey. And this was what you call infill new construction development. We got the site, we purchased it from the city of Newark, and we assembled financing with various sources. There was some subsidy involved with that project in conjunction with private equity. And what was built there was a new construction 24-unit condominium building. There was 18 2-bedroom, 2-bath units, 6 3-bedroom, 2-bath units, all with parking. There's a gym on the ground floor. And so that's a prime example of urban redevelopment at its finest, and restoring a delinquent lot.
And this is all done by your company?
By Mid-Atlantic Investment.
And you're going to do more of this stuff?
Yes, absolutely.
And we sold 21 of 24 units. We have three more available units if anybody's interested.
Before we go, I just wanted to share Victor's information. Victor and Michael, both at the same company, and it's the Mid-Atlantic Investment Alliance, LLC. Thank you very much, Victor and Michael, and see you back for the panel. All right. Before we go, I wanted to bring in the full panel for some final thoughts. Eugene Mitchell, Mark Smith, Sabrina Lamb, Victor Baker, and Michael Button are all back. So let's talk about something we didn't talk about, and that's credit. Credit is very, very important, and a lot of times credit is an issue with getting loans, paying off debt. Any thoughts as I go around the room about how to improve your credit, how to keep your credit in good shape? Sabrina?
Well, I would first say never sign anything that you haven't read. Never sign anything that you don't understand. Most times the negative entry point to a negative credit rating comes through student loans and taking on debt that you really really didn't pay much attention to, whether it's a cell phone company or so forth. But also I really encourage everyone to review their credit report every single year. There's free resources,
right.
annualcreditreport.com, to make sure that what's there is accurate, because sometimes it's not. But that would be the first thing.
Victor?
I would say definitely if you're starting entrepreneur, have a small business, business credit is crucial, and any credit that you do have, try to control the ratios, keep your outstanding balance under 30% as best you can. That reflects well with the payment history and the cycling of it, and I've found that tends to get you extended greater credit limits, which you really can't be a successful entrepreneur without access to credit. It's crucial. It's just it's the foundation. So it's like that should be your number one concern: establishing credit, maintaining it, and growing it. And I think it goes hand in hand with scaling your business.
Yeah. Also, watch out in college. I know I did it. Everybody gets offered these credit cards in college, and I said, "Oh, I'll pay it back." You never do.
Right.
So you got to watch it in college. You got to watch those credit cards come at you.
Absolutely.
Say no. It's better because you'll pay for it as an adult.
Unfortunately, you're not quite as responsible at that age.
Exactly.
At that time with the credit.
Exactly. But the credit card companies don't hear that.
Yeah,
Right?
they don't care. They don't
That's
care.
your business model, that you don't pay it back.
Right.
Yeah.
Right. Is it? It's
predatory.
that sounds like another show there. The predatory lending. Eugene.
I was just thinking of this whole panel and conversations about creating wealth, and the biggest detractor from wealth is taking on debt, and we keep funding it, and that impacts our credit report and gives us more negative, in the way of pulling away from our opportunities in life. So I'd say let's not continue to purchase symbols of wealth, but truly do what it needs to be done to create wealth.
That's right. I think Kanye said it best, right? He says, "Buy some land, let's not buy sneakers."
The brand.
I know, right?
The brands.
Right.
There you go.
Right. Buy some land, not the brand.
That's right.
Mark.
I think that if you want to get out of a bad credit situation, the best thing is to admit that you're doing something wrong and change your activity immediately. What everyone wants to see is that you're, number one, trying to pay off the debt that you owe. You always pay your debt off by the highest interest rate first, and you work your way down. So if you have a credit card charging 25%, that's the one you're supposed to be paying off as quickly as possible, and then you quickly work your way down. Your credit score will go up as you pay off this debt. So you have to be committed to it, just like going to the gym. You got to be committed. It's a lifestyle.
Yeah, there's a lot of information online about how to build your credit. Obviously, most of your credit scores will be based upon how paying your bills on time, how many trade lines you have, or a line of credit that you have. So in other words, you have to have some credit history, the length of history. So the longer you have in terms of credit, and the more often you pay your bills off, the better off your credit score is from my understanding. I want to go to some final thoughts on real estate with Michael and Victor. What are you guys working on now, currently?
So currently we will be launching a value-added income fund. You can check the Mid-Atlantic Alliance website. There'll be a link with all the information. It'll be an opportunity to invest and partner with us. The fund will be a best efforts round. We'll be raising $25 million, and it'll be designated for the purchase of commercial, residential, mixed-use assets. There'll be some already cash-flowing assets that'll be purchased with that funding as well. And that's the major thing that we have going on right now.
So you said there's opportunities to actually invest?
Yes.
So we're
yes.
talking about the real estate investment. Somebody can actually
Right.
take money, I can take money and invest
Right.
with you.
You can partner with us
Oh, wow.
and be a part of a collective investing, which I think is an empowering opportunity for our community.
And very nice. And we put your information up on the website, both of you and Victor. Michael and Victor's information is already up, and their contact information is up. So if people want to get involved and invest in your deals, and obviously we've shown a proven track record
Yes.
of buying, a building, and then would you sell it and sell it?
Renting.
Yes, successfully
Right,
selling.
right. 21 out of 24 units, huh?
Yeah.
Already done.
Yeah.
In last
Fantastic.
year's market, I want to note, most asset classes were flat to down, I believe, last year. We had very strong sales, so
That's
we're doing
fantastic.
something right.
Awesome. Thank you very much for again coming. Sabrina, final thoughts on entrepreneurship?
It is one of the few paths to true wealth and true freedom. Offer a product or service, even if you're keeping your career, your job. Choose something, sell a service or a product.
Eugene, final thoughts on life insurance.
It's one of the easiest, safest, and surest ways to create generational wealth. I invite everybody to purchase the book, The 7 Untold Rules for Creating Black Wealth. And please email me and from the info there, and I'd connect you with an advisor if you don't have one.
I got to tell you, you're absolutely right. It is certainly a surety there, right? Because I think Benjamin Franklin said it best. The only guarantees in life are death and taxes. That's right. And if you have life insurance, somebody's definitely, unfortunately, going to pass. And if they're insured, there is a way to build wealth there. Mark, final thoughts on investment.
Yeah, I think that, again, the best way to do is just get in the game. Stop thinking about and pontificating, oh, maybe I should buy something. Like, just start buying something and buy it consistently, and I think you'll do well, as the market has always shown throughout history, that you'll make money, but you got to start sometime. So do it today.
Awesome, that's right.
And Richard, what everyone was talking about, everyone is talking about buying into an asset or investing into an asset, something that can bring a return on the investment. If you're just purchasing something that has zero value, you cannot expect wealth.
That's right.
So we're encouraging everyone to change their mindset and to take a portion of their money, half of their money, and invest in something that can bring them a return.
That's right.
This sweater is not, a jacket's not going to bring any return to me at all.
Or like a car is a depreciated asset, right?
That's
You
right.
buy a car, as soon as it rolls off the lot, it's worth much less than what you bought it for. That's absolute. I think that's good theory, good thought. When you're buying something, is it creating value for you? That's what we all need to think about. Mark, Eugene, Sabrina, Michael, Victor, I thank you very much for your time. If you need to get in touch with me, Richard St.Paul, my information is coming up next. If you have a small business need or your family has a legal issue that needs to be resolved, please contact me at the St. Paul Law Firm. I thank all my guests. I thank all of those in the studio who helped with this. Have a good night, everyone.
Thank you.